Good morning, traders. It is 8:01 a.m. on Monday, the 21st of December, 2015. Happy holidays to everyone. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Overnight news, very, very light. It is a holiday week with Christmas coming in on Friday. So expect everything to be very light this week. The only major news item I have in front of me is Sweden's December consumer confidence came in at 98.7 versus 95.6, very strong. Manufacturing confidence 114.3 versus 108.1. The only number I have that is ahead of us really is a 9 o'clock Central, 10 o'clock European consumer confidence for December, expecting negative 5.8. The rest of the day is pretty clear. There's really not much to go on today. As far as since it's a Monday, as far as the rest of the week, and the Spanish election took place. The Prime Minister's People's Party won 123 out of 350 seats, losing its majority power. It's still a victory that they held on to their spot, but the results were disappointment from 186 seats to 123. Slight change there. Since it's Monday, for the rest of the week, we have tomorrow UK consumer confidence, US core PCE, GDP, housing price index, and existing home sales. Wednesday, we have UK GDP, index of services and current account, US personal income, PCE core, durable goods, new home sales, University of Michigan. Thursday, we have US initial jobless claims, and Friday, the markets are closed. There are very, very few markets around the globe that are open. On Thursday, many products close at 12 noon Central. The indices close, I believe, at 12:15 Central. It'll be a half day, probably a very, very quiet day. The market this week has just 3 days or so of full trading sessions. Everybody talks about the Santa Claus rally, and we haven't seen that yet. We have popped up and sold off on the FOMC and have continued to stay lower since. So let's take a look at the charts. All right. So on Friday, a lot of activity. On Friday, we were looking for my expectation on Friday. If you were here for the Trader Bite, you might have heard this. My expectation is to open on the edge, if not in out of range, and the expectation is for a test higher into Friday's range with a potential strong resistance in the 37.75 area. If it does go up, the expectation is for it to try higher, fail, push back, fail at the prior day's low, Thursday's low, and then start to move down towards the 2004. And that's basically what happened, except it had no real buying power at all. It tried twice. It tried to get back into the prior day's range, Thursday's range. Twice it tried there, and it tried there, and it was not able to stay up there. On the second test, the failure was very clear, a strong rotation down. So overall, the market's not finding it's buying interest and is selling off. Most of Friday was spent um, with some pretty decent pullbacks, actually. Pretty decent pullbacks to the mid. There's a perfect pullback here to the OS low, and basically settled in at the low on Friday. So overall, Friday was a normal variation day. The trade was a uh, pretty orderly, given the type of the shape that the profile has made. It's traded quite a bit in its value area. This value area is valid. Um, we don't see one of these thin, choppy, multi-distribution profiles. We see that the market really traded the heck out of the middle here before it broke down in the afternoon. It did close near its low, so the auction seemed to have been cut off here, um, and then has bounced up since in yesterday's trading. But overall, it's um, it's fairly orderly. Today it's opening at 2009, or it's trading at 2009 with 2013.75 and 1995 being the overnight range, the overnight high and low. It's the overnight session. We'll take a look at that here. The overnight session had a strong rally on the right after the European Open. The Swedish number came in right here, and then the market popped up after that. It has a fairly weak high with a multi-distribution profile with an LVN in the middle, so I'm watching this 2004-2005 area again. This is going to be your over-under line for today. Um, we're trading right at the point of control, as I said earlier. So as we fail through the 2004, then it's likely to test the overnight low and then move down further towards the next key areas below. The 91.50 was the CLVN in the area, 91 being the low of Friday. So we had a pretty good test of that. Looking at the bigger picture of what's going on here, let's switch to a 60-minute. Okay. Bigger picture, we've migrated once again below that 2026 area, and have traded through. On Friday, we basically traded this lower distribution here and are moving lower again. This makes this low vulnerable. The possibility here is that we move down, we've put in a low, pushed the high. Remember, we pushed against this MC point of control, and we may put in a higher low for a resumption of the pushback to the MC point of control, since we've been stuck in this balance zone for a while. The more interesting play is a push down in and through the 1980 quarter, and then to start testing the areas below us. You can see that the other thing to note about the 2004, right here, this big W formation that we had from August had a pivot point at 2004 before we took off. We tested from above before. We came down through it. We went up back to the point of control, and we came down into it on Friday, and here we are again. So overall, this area here is of strong interest to me. This 2004 is as I said, not only is it for the overnight, but overall, it's a strong over/under area. It's important to watch for how it auctions if we push lower into it this morning. As far as what the plan is for today, given the fact that it's a holiday, it is the last um, chance for the market to do something into the Christmas holiday. We do have a few days of trading next week as well. Monday through Thursday. Um, but overall, it's a good time to be cautious. It's a good time to be. This could go either way. Right now, we are at an extreme of balance down here, and we are in a sell-off kind of condition over the last couple of days. So I'm just going to sit out the first 15 minutes or so and wait for the market to show its hand. My expectation is it's likely to slow down very quickly into the session, definitely by the European close at 10:30 Central. The primary hypothesis is responsive. I'm looking for the market to test lower, to push lower, and potentially take out this low before it chops around and starts moving back up into balance. But expect the market to likely respect these value areas above and below. So the key trade idea of the day is a likely test, chop, break lower through the overnight low, take out this week low from Friday at the 91, and then fall back in and back into balance again. That's the main expectation. The secondary and the tertiary hypos are going to be the opposite. Push down, push down, and then test the other side of value, and then potentially push through the high of Friday for a test. But again, 1950 is value high, and it's likely to be tested and present resistance on the first shot. We still have a gap open here at 24 quarter from Thursday. We have not closed that gap, and we have not tested that gap zone from below upwards. As soon as we test the gap zone from below, this gap zone from the 15th disappears since it's been tested from above. Once it's tested from below, that auction is complete. Okay, I don't have a solid plan for today, so it's really about watching which side has dominance, knowing our targets below um, and above, and then just responding to how that goes. Okay, good luck to you today, and I will catch you tomorrow. Take care.